Welcome to the Innovators and Investors Podcast. I'm Kristian Marquez, founder and CEO of Finstrat Management. At Finstrat, we provide CFO-led accounting, finance, and reporting services to assist clients monetize their business. Stick around to the end of the podcast, and I'll share how you can be our next guest. Now, on to the show. Hello, and welcome to another episode of the Innovators and Investors Podcast. I'm your host, Kristian Marquez, founder and CEO of Finstrat Management. Really excited because our audience is in for a big treat today. We'll have two guests on the podcast. First off, Kevin Weber, Managing Director at Amex Ventures. And shortly into the podcast, we're going to be joined by one of Amex Ventures' new portfolio companies, Ayal Karmi, who's the co-founder and CEO of Nakuda. But with that, Kevin, welcome to the podcast.
Thanks, Kristian. Happy to be here. Looking forward to spending some time together.
Likewise. So with that, I'd love to start with just what your career journey has been leading up to joining Amex.
Absolutely. So, Amex and Amex Ventures and venture investing more broadly stumbled into it a little bit by chance, but over the last 10 years or so, it's been a great journey and absolutely love what I've been able to help do in the founder ecosystem. But to rewind a little bit, I started my career in corporate finance and M&A. I started at GE Capital, spent some time in Connecticut, a little bit of time in London, India, New York, bounced around a bit. But started off, with a corporate finance role that ultimately transitioned into some traditional M&A. And at the time at GE Capital, we were working on selling most of the business. And as we were selling off these various business units, had a lot of time to work with various folks across the GE Capital teams and business units, but as well as a number of investment bankers. And in many ways, as we were winding down, sold myself out of a job. So come 2015, 2016, had the opportunity to join Synchrony, which is one of the business units that we took public out of GE Capital. And they operate in the financial services space, a lot around credit cards and consumer financing. And at the time, becoming a public company, they were standing up their corporate development arm, which was going to be a mix of M&A, which was some of the work that I knew, but then as well, venture investing. And for them, in the early days, we were defining our strategy, setting the things that we were going to do. We were focusing a lot on early stage investments across fintech, across commerce, and then a little bit of healthcare, particularly where healthcare met a little bit of the patient financing and consumer responsibility angles. But through that, it was the time that I realized that the investing side, I just enjoyed a ton more. I enjoyed working with founders. I enjoyed working with other investors, looking to invest and help build companies and build products and have a relationship for the long term versus some of my prior work that was all around maximizing around deal price, exiting a business and moving on to the next transaction. And so found myself joining more formally Synchrony Ventures, was there for a number of years. And then if I fast forward to the summer of 2023, joined the team here at Amex Ventures to help build out our enterprise tech and software investing team. And so for us on the investing side today, focus a lot of my time around credit and fraud, AI and machine learning, infrastructure, cybersecurity, and a host of other domains that Amex might be interested in, really as the buyer of some of these softwares.
Got it. Okay, so exciting career. I imagine you have stories you can share about your time overseas. Maybe we'll save that for another podcast. But for today, investment thesis. Would love to know, as you're evaluating companies in the segments that you shared, what's your criteria that you use, and then is there any particular lens that you use to hone in on what you think has a company has a potential to be a high probability success?
Absolutely. So let me share a little bit about Amex Ventures broadly, and then I'll share a little bit more about myself and my team where we're digging in. But Amex Ventures, the group's been around for close to 15 years. We are a strategic corporate venture capital arm where we're looking to make investments that we believe will drive financial returns and be category leaders in the spaces that they operate, but as well that do translate and have relevance back to, the American Express business. And so with that mandate in mind, you know, four or five kind of areas that we tend to talk about and think about when it comes to investing. The first is on the consumer side. And when we think consumer, oftentimes it's, how do we enhance our card membership value prop and the ways in which we want to work with and relate to consumers. Oftentimes that may come through, the travel and dining space. We think about fintech. That could be a mix of consumer fintech, B2B fintech, payment infrastructure, you name it.
Okay.
We think a lot about commerce. So with, American Express, obviously we work with and partner with a number of merchants. They could be selling, clothing, or they could be offering travel solutions. But what are the new ways in which, merchants might want to try to be discovered, drive engagement with their customers, and help thinking about ultimately sales conversion?
Okay.
On my side, enterprise tech and software. And then, frontier technology. So for us, what does that mean? Could it be Web3 and crypto? Could it be quantum computing? A host of other things. But, when we're looking to invest and thinking about the future, what might be the things that start to impact our business or our card members going forward? So pretty broad remit. The team tends to focus on opportunities that really exist or companies that might be creating value in the markets where American Express's business operates. So a big portion of that is the US, but we do look internationally. So we'll focus
Okay.
on Europe, parts of Asia, Latin America, the Caribbean, you name it.
Okay.
Um, so strategy and framework for investing. As I said, we are the corporate venture arm of American Express. We do invest off the balance sheet, and we'll look to make those investments again that have a strategic tie back to the business. And so the types of companies that we're looking for tend to be on the earlier side, you know, with startups, let's say maybe seed, Series A, Series B. We can go later, we can go a little bit earlier, but sort of that early stage is our sweet spot. And then we are looking for, again, the companies that we think we can partner with or we can add value. So in addition to being relevant to our business or to our card members, do we think we will actually use that company's product or service? Do we think that we can help distribute that company's product or service? And so what are the ways in which we might actually be able to be that truly value added partner other than just perhaps providing capital? And so
Mhm.
that to me is really the exciting part if we can make it happen. And I think, over various hype cycles, for any strategic investor. But I think the team here at Amex has done it well, predating me, and I'm excited to continue, helping in the future. Has really been able to bring together that value piece, that revenue creation piece, which I'm hopeful that we can continue to execute on in the future.
Fantastic.
So,
So
oh, go ahead.
I was going to say, so you mentioned you call out what I'd say are some exciting trends. Web3, crypto, artificial intelligence has permeated, I'd say, the majority of our podcasts to date. I'd love to get your perspective on either those or any other trends. And then because we're fortunate to have Amex here with us, if you want to talk about fraud or risk as well, I think that'd be great insight.
Absolutely. Look, I think at Amex Ventures, we are like many focused on trying to figure out, generative AI, AI agents, agentic commerce, agentic payments, many of these things that are uh, gathering a lot of time and attention from investors, from large enterprises, from founders, et cetera. Um, and so for me, what I'm really trying to figure out and find are the companies that are building and going to be the leaders in their categories, but are also thinking about how to work with, the enterprise and ultimately, in my case, within the regulated financial services space.
Yeah.
And so what that leads to, and I'd say to highlight a couple of things where, I and my team are spending some time. Um, the first is really all around sort of generative AI. And I'd put it in a couple of buckets. Kristian is, maybe first, the types of tools, the types of companies that are going to allow us, American Express or other financial institutions, to actually adopt generative AI. And so how can they help lead to enterprise enablement, various security solutions, ways in which we can just safely as colleagues use, the new power of foundation models and LLMs, and really start to embed that hopefully across, you know, our colleagues' daily workflows, the ways that our customer facing CCPs, or folks that are working in our call centers, might be interacting with card members. How can we make those experiences, better for the future? Um, but then I'm also looking at, the host of businesses that are actually using, generative AI in their own products and services, of which we might become ultimately customers. And so think, tools and things that might help in the cybersecurity space. Are there
Right.
companies out there that are actually using generative AI to just be more efficient, and to help manage, some of those risks that might emerge? Um, and I'd say the last category, which is across some of those, is of course, AI agents, and what does that actually mean?
Yep.
Um, and so for me, again, two buckets similar to kind of the generative AI theme. How do I think about companies that are building AI agents for enterprises to use? And then, what are the impacts of AI agents ultimately to, the financial ecosystem and various payments companies?
Right.
Uh, and so could spend a whole host of other use cases and areas that we're spending time, but I think those are some of the big buckets that, my team specifically is certainly digging into.
And so, if we can unpack that for a moment, a lot of stakeholders in our community have said that 2025 is the year of AI agents. Our organization spends a significant amount of time looking at technology that's on the market. Um, Curious your perspective. Or do you still think it's early innings? You think that we're maybe near the top of a hype cycle? Or are you really encouraged by the portfolio companies that you're looking at?
Early innings and encouraged. I mean,
Okay.
look, I think the pace of change has been, unprecedented, and we've just seen tremendous momentum from, a tech ecosystem perspective of pushing forward across generative AI, and now the new use cases that, are sort of being enabled and unlocked. And so I think early innings and ton of opportunity. I think the reality is, across different sectors, we're just seeing, spaces that can allow for quicker, earlier adoption than others. And so I remain very excited about the opportunity that, you know, an agentic world might bring in the future. Um, but as I think about, investing and especially investing, in an agentic future in financial services, it's still going to be a long game. And so being very mindful of how regulation may evolve, how compliance may need to evolve, and the whole landscape in terms of, the agents and ways in which they might work with, you know, various types of enterprises, and very excited to continue to try to find, founders to back, that are building exciting things.
Yeah, and I share your enthusiasm and your assessment. As I mentioned, I'm really encouraged by some of the technologies that we're looking at. But we operate in the accounting and finance space, and while we see a lot of tools that will automate key functions of a back office, we're still at a point where you need human eyes to do a final quality check, just given the complexities associated with individual sets of financials, or just verifying that a payment is accurate before it gets made. So agreed. It'll be interesting to see how things play out in the next couple of years. Um, okay, so decision gets made to invest in a portfolio company. Would love to know the extent that Amex is either hands-on or hands-off with working with the founding team.
Absolutely. So, in many cases, I think the answer truly is it depends. And it could depend on the company. It could depend on the investor. It could depend on the part of the business that, the particular portfolio company is hoping to work with and be engaged with. But I'd say, generally speaking, we want to be as hands-on as we can with Amex or ways in which we can add value. And then my personal philosophy for founders is I will be as helpful and involved as they would welcome in terms of running their business and making decisions that might be outside of, American Express or the other areas that I might have more control. For example, the ways I hope to work with founders, might be on helping them build their sales pipeline, might be thinking about, fundraising and growing the business, might have perspectives on new markets or products that they should enter. But, I really want to appreciate that they too have, other investors, other stakeholders, other perspectives that might be around the table. And so I just want to be mindful of not looking to provide information overload, not trying to take, time away from, founders as they're looking to build and think about the strategy of their company, and really focus on what they think might be value add, not necessarily what I might think will be value add. And so in those areas, again, sort of the ones that may not be as specific to Amex, happy to be as involved as makes sense for the particular company or for the particular team. And then when it comes back to Amex, that's the area that hopefully we can be as helpful and as hands-on as possible, helping them navigate the large enterprise that we are, helping them find new opportunities, new potential partnerships, new use cases to think about building with us. Or in some cases, seeing if we can unlock, distribution to them to, our merchant partners or other strategic partners across the business. And so what are the other levers that ultimately might help lead to new sources of revenue for them? Those are the pieces that I want to be as hands-on and try to be as helpful as I can.
So, we haven't explicitly said, but I presume all of our audience understands that Amex Ventures is, it's corporate venture capital within American Express. And, having spoken to a lot of founders, I find that they're not necessarily aware that you have Fortune 500 companies that are investing early stage. But to your point, I mean, absolutely can be a brilliant fit because it can assist with growth. And so, what's the, when you're working with your founders to, execute on a growth strategy, how does that work internally to get buy-in from Amex stakeholders for potentially working with the portfolio company?
It's a good question, and like, the answer in my head, of course, is it like depends a little bit, but it's there's no one size is going to fit all. I'd say, my goal, our team's goal broadly, is really to make sure that we can help equip any of our founders, their teams, their sales leaders to be prepared, and to know how to navigate the organization and be aware of the stakeholders that they're going to be meeting with, and we think, or they think, might be, the right buyers or the right partners. And so whether that means, you know, just a little bit of prep and background in terms of the particular business unit or the functional team that they're engaged with. If that means helping to, provide some framework of how to think about just general enterprise readiness, the types of questions that may come up from a security review perspective, or our vendor management process and how to think about navigating that, any potential timelines that might come up or ways to consider that. Those are some of the ways that I'd say tangibly we try to get hands-on and just provide as much context and as feedback as we can. And then, I'd say, look, with some of our colleagues internally, a lot of times companies that we're investing in, there might be a specific use case or problem statement that we think a company could solve or might be able to help with. But there might be other areas that we're just unaware of or, not necessarily thinking about where a particular portfolio company could help. And so oftentimes we just try to encourage our business partners internally as well as our founders, to think about other ways in which their technology could ultimately apply to other problems or other things that come up. And so to do that, a big part of my day job as well as the team's day job is to just really have a good pulse on what's going on in the business. What are some of those problems that are arising? What are the ways that people are trying to solve them, and see if we can connect those dots, even if it's not the obvious one, or not the potential partnership that we were thinking about when we initially made the investment.
I mean, it makes perfect sense that the organization, has a vested interest in making sure that you're intimately familiar with everything that's going on inside the company, because it's a win on both sides. So, obviously a big part of any early stage company is ultimately monetization, but there's a path, and typically that path involves follow-on rounds of investment. Would love to know the extent that Amex Ventures either participates in subsequent rounds or makes introductions to the next group of investors.
Yeah, no, great question, and often a sometimes could be a misconception amongst corporate venture capital as to whether or not they do write follow-on checks and take pro rata positions, et cetera. Um, and in our case, specifically at Amex Ventures, we do expect to be long-term capital partners, and so we do expect to follow on. We do expect to hopefully write that subsequent check. Not every case, not every company. There certainly are instances where we may not have, but absolutely our intention from the first time we invest is to help grow and scale with the business. And then as it relates to, helping with fundraising and other areas outside of, Amex Ventures directly, absolutely. We want to be helpful in leveraging our network and marketing our portfolio companies to other investors, sharing, our excitement and some of the reasons that we ultimately look to back them. And so depending on the company, depending on the process and the need, for sure, we will help in trying to be a key partner in them securing their next round of financing.
Fantastic. Well, everyone who's operating in this ecosystem knows, though, that the path is not straight and up to the right. There are challenges, and so we'd love to get your perspective on some of the common pitfalls that you see founders make, and any counsel that you would give to them to avoid it.
Yeah. Um, Look, great question. And I'd say the piece of advice I'd want to leave is probably more specific to corporate venture capital, but as well just companies looking to work with large enterprises. Um, but it's really the age-old wisdom of like don't overpromise and underdeliver.
Mm.
I think from the CVC side, I see it time and time again where a founder communicates that a particular product is built, that they have this or that integration, that they can deliver this particular solution. Um, and the reality is, when we're doing our investment diligence, we're going to dig into a little bit of that. And we've got, some of the smartest folks, across American Express that can help us really unpack a particular product, a particular solution. And I'd say 99 times out of 100, we will uncover, if a product or a particular part of the solution is not truly there, that,
Mm.
a founder or the team is sharing it is. So highly suggest, and it is much better to openly share just where the product actually is, what exists today, what might be roadmap, what might be things in the future. And perhaps those things change based on input from a particular investor or a particular enterprise, but just being very clear in terms of where things are at today and what the vision is to go. Because particularly, with CVCs that have very strong product and technical teams working with them often on diligence,
Mm.
we'll figure out, exactly what's there and what isn't.
Yeah, I think that's a great point. I don't know that we talk about. I think maybe it's a given that we think everyone has integrity, and maybe it makes sense. We default to trust. But I couldn't agree more. It's very difficult to walk back, and ding your reputation. And so, yes, 100% agreed. Being as forthright as possible. It can be hard. But I think I've also kind of come to realize that at this point, that everyone who's operating in the early stage ecosystem appreciates nothing's perfect, and so I agree. Being candid and transparent is beneficial in the long run.
Yeah.
You know, throughout, up to this point, I've heard tons of great reasons of why a founder should explore, potentially seeking to get a CVC on their cap table. Anything else that you can think of that are, some of the benefits of working with larger corporate organizations that you've seen can benefit founders?
Yeah. Look, I think one of the biggest, of course, is the revenue opportunity, hopefully within that particular organization or that they can derive. Um, but then I'd say, depending on the business, there might be a number of other opportunities or ways in which that corporate investor, even if they don't deliver the near-term value, can help unlock value or thinking for other potential customers. So, for example, if there is a group within the organization that can help provide just some product feedback or design thinking or ways in which an enterprise buyer might ultimately look to approach the solution, the ability to share that as early in the building journey for any particular founder and organization, I think can be immensely helpful. um, and so a lot of times that does come through maybe testing or evaluating the product. But I think that there might be other first principles and just general guidelines that sometimes product teams or technical teams can offer that might be partnering with a particular, corporate venture group. Uh, and then I'd say, for some and a lot of corporate venture groups, do think about the distribution angle and how they can help with that pipeline generation, but really trying to dig into how that may actually exist within the corporate venture capitals group. Who is the team that's responsible for it? How does it happen? What are some of those relationships that they have, to the extent that they can share? And oftentimes there's cases where they can't, but to the extent that they can share where they truly think some of that value unlock could be, or where they can add value, exploring those early and trying to cultivate those relationships as soon as possible, hopefully long term, goes a long way just in terms of expanding the pie that the particular team or company is going after.
Yeah, it's completely, if we stop a moment and think about it, it's completely intuitive. I mean, everyone would agree that two heads are better than one. And when you're looking at the collective wisdom as an organization as large as a Fortune 500 company, you start to realize, wait a second, if I have challenges, or if I see other opportunities, I have lots of opportunity to validate them when you have a corporate venture capital as a partner. Makes great sense. And so, you know, I know we talked about support, but I neglected to ask, leading up to that point, so actually pitching to a CVC for the first time, feedback or advice that you would give the founder who's getting ready to meet with you.
Yeah. Another good question, and I'd say for me, and again, will probably vary based on the particular investor you talk to. Most of the things I'm looking for, Christian, in these founders and in these businesses, will be similar to the other investors that they're pitching. The traditional VCs or other CVCs. I'm going to be looking for market size, market opportunity, business model, product market fit, problem statement, strength of the team, et cetera, et cetera. And so be sure to hit on those and be solid and crisp in terms of just the general business that you're building, and why any investor should be excited. But then when you add sort of the corporate piece to it, I'd say the biggest piece is trying to understand and unlock as much of the organization as possible, and trying to figure out either through the investors that you're speaking with, or others in the industry, a little bit about just how that company operates. What might be the types of business models that they like. How might they think about trying to actually deploy solutions? Do they want to go on-prem, or do they need to think about a cloud-based solution? Um, how do they typically work through bringing on new vendors?
Yeah.
In all of that context of the organization, or at least trying to ask the questions of the CVC that you're speaking with, I think just shows a lot of empathy, engagement, and trying to understand the enterprise, which hopefully leads to that long-term success and long-term relationship. And so it's not always as easy as I said to learn and get some of that information, but to the extent you can hone your network or build up a relationship with that particular CVC to try to get to those questions, I think long term you'll be much more successful.
Yeah, I mean, it makes really good sense. You know, there is a reoccurring theme on the podcast where it seems like the most successful founders have in their DNA getting to know their customer. And if you can, think past CVC as just being an investor, but to your point, a potential customer and going into a pitch, understanding how the organization works and what's important to them, I mean, it makes complete sense that you probably increase the odds of identifying a good match. With that, as I mentioned at the beginning of the podcast, it's a bit unique because we have Ayal Karmi. As we mentioned earlier, Ayal is the co-founder and CEO of Nakuda. Ayal, welcome to the podcast.
Thank you. Happy to be here.
And so, great segue, because now we're going to have the opportunity to actually see what traction looks like inside Amex Ventures. And so with that, Kevin, would love to know what it was about Nakuda that you found attractive.
Yeah, and they all great to see you.
Likewise.
Simply put on this one, I'd say it was a combination of team vision and the market opportunity. Um, if I take a step back, before we met Ayal, and I think even in our first meeting, it's one of those few areas I'd say that we didn't need to be sold on the market opportunity, the potential future for AI agents and subsequently agentic payments within that, which I'll let Ayal talk a little bit more about where they're actually building. But we just had great conviction on the space.
Okay.
And then so it was okay, who do we partner with, and who is building the way that we at Amex Ventures are most excited about? And that was really Ayal and the Nakuda team. Um, and so in this case, we actually initially got connected via their seed investor, Madrona. Once the introduction came across, we began to dig in, get to know the team, get to know a little bit about their vision and the early days of the product. And we were just overwhelmed and compelled, I think, with how well it was going to align to some of the things that we were thinking about here at Amex Ventures. And so moving ahead with a potential investment really became a no-brainer. And so
Fantastic.
we're excited to have them and see what we can help with going forward.
Fantastic. So due diligence done, investment made, and so on that note, support. I know we touched on it leading up today, but perhaps give us some color as it pertains to Ayal and team.
Yeah. So look, it's early days for us. We've just recently closed our investment. As the company continues to build and scale, as I said, it is one of the spaces that we are most excited about around sort of this agentic payments and agentic commerce ecosystem. And we, American Express, believe that, hopefully we have a unique vantage point being a vertically integrated, payments provider, bringing both our issuing side of the business, the network side of the business, and even the merchant side of the business together to really help see how this new part of the industry is going to unfold. And so to start, a lot of what we hope to help with, with Ayal and the rest of the Nakuda team is really coming back to a little bit of some of the first principles and product direction and product vision that we were excited about when we invested, but as they continue to iterate, the space continues to evolve. How can we just be sure that we are providing as much guidance and direction as possible to what might be really, really built well for not only American Express, but hopefully financial services at large. And so that's where we are trying to spend a lot of our time near term. I'd say longer term, as Ayal gets into the business, I think we'll kind of unpack a little bit in terms of what some of those partnership opportunities could look like. But today, really excited that we can help be there at the start of the journey, and hopefully continue to grow and build a big business and opportunity together.
So, Ayal, again, welcome and congratulations on the financing. Super excited to have seen you receive an investment from Amex Ventures. And so, before we get into the problem that Nakuda is solving in the marketplace, and we briefly touched on it, why don't we start with a little bit about your background, and also, your role within the company.
Thank you. I'm very excited as well and happy to be here. So I'm Ayal. I'm one of the co-founders and the CEO of Nakuda. So my background started my career in the Central Bank of Israel in the cross-border payment team actually. Then pivoted to AI. So started my own companies with a few co-founders in AI and agriculture. So imaging fields with the drone and analyze the image and give an agronomic report. And after that, I ran operations at a startup named Solidus Labs, does digital asset market surveillance, so trying to root out bad behaviors in trading. And after that, me and the co-founders and I kicked off Nakuda. We started experimenting relatively early with AI automation and agents. Almost jokingly give them credit card to try to buy order pizza or buy things for us online. It kind of failed miserably. They really struggled. A lot of error rates. It spiked kind of the bot preventions that these websites usually have, and we realized there's kind of an inherent friction in general. These flows assume there's a human kind of that taps by. That's how we went into the rabbit hole and started Nakuda.
Fantastic. And so, if we can build on that, would love to get a sense of, what you see now that you've secured this investment, how you're going to deploy the capital, and bring this larger vision to life.
Yeah. So I can also tell a bit about Nakuda and I'll answer that. But I would say that our thesis is soon we're going to see millions of these agents, I would say, roam the internet. So AI that can act and do stuff on behalf of us, on behalf of users, and we will use them for various things and tasks. And we think they will need payment capabilities and transaction capabilities to do stuff, behalf of us. So we in Nakuda, we give AI agents a way to pay online and without humans involved. We have an SDK that an agent developer can install, and we help the agent basically have the credit cards and payments capabilities within him, so he can actually pay for us when it's needed. And we also what we call record agentic mandates or the user mandate. So I would say it's a signed and a verifiable record of what the user actually authorized and intended to do. Like spend limits, certain merchants maybe you intended to buy with, basically what you authorize this agent to do. So with these two pieces, basically an agent can do a checkout, and the payment stack and the payment value chain and Amex as well, I would say, can verify your intent, and we stay in control, although the agent is without a human. And I would say an agent can check out with issuers and card networks can trust that transaction. That's the result of that.
And so, artificial intelligence has been a reoccurring theme on the podcast. And even more so this year has been a focus on AI agents. Without revealing any trade secrets, what insights can you give us on how you think about training, quality, and ensuring that the agents are performing the tasks that they've been asked to complete?
Yes. So in our neck of the woods, and we think about payments, I would say in the last decades, rightfully, obviously, payments were really focused about what we call authentication or identity. So prove the card is yours, prove that Kristian is Kristian and nobody, or prove that Kevin is Kevin and nobody stole the card. So there's passkeys and biometrics and login and the CVV, of course, and stuff like that. But then the system assumes that any buy click is intentional, like after you authenticated. And now this AI agent comes and then they're between the authentication and the actual purchase, the actual click for the buy. So but the user isn't pressing the button anymore. The software is basically. And that shifts, I would say, a key question on authorization, which means did the user truly intend to purchase, under what terms and limits? So our answer is the mandate that I mentioned, and it captures the user intent and it rides along with the transactions. And I would say that's, I think, the next phase of these agents, and to objectify our intent and our mandate as well. It's very important that we're still in control.
Totally makes sense. Okay, so now I'm going to ask you to put your forecasting hat on. There was an opinion earlier on that we're in the early innings of AI agents. I'm sure everyone's going to excited to see how the next couple of years play out, but would love your opinion. As you start thinking or doing long-term planning within the company, what do you expect has a good chance of playing out?
Honestly, I think we're heading towards a world where, like, the tedious parts of buying, especially the checkout, will probably get dehumanized first. So think about when you shop, there's a spectrum of things that you really want to be a part of and you have a taste, the things that you don't care, the things that you really want to be a part of is outdoor equipment or coffee machine, right? People are very particular with that these days, or your water filter to your fridge. Probably you care a bit less. But I think for the research and kind of opinionated on the things you care more, like the coffee machine, you will still want to be there. Agents will help you discover things and point out things that you might like and educate you. But then once you, let's call it, adjudicated what you want, you could just say, okay, go get it. And you might not even specify the certain merchant that go get it. I think agents could even run this like auction or RFP. Basically, I have an intent. I research for something and it's pretty clear what I want. Which merchant is going to fill it? Maybe something like that. I think we're going to this, let's call it, three-dimensional, even quantic future of commerce. This thing doesn't exist today. It's almost impossible, I would say, to coordinate and orchestrate what I'm saying. But I think we're in the kind of the start of that. We'll see a few agentic transactions or autonomous payments even this year. And what I'm saying is maybe a bit extrapolating to the future. But it's going to be very, very interesting. And the bedrock of all of that is what we mandate or our intent and authorization.
Oh my gosh. So as I'm sitting listening to you, it is kind of exciting. You think about, just a lot of tedious purchase that takes place that you're going to make. And if there's opportunities to at least put some of that on autopilot, why wouldn't you?
Yeah.
But this idea that maybe it can create price benefits because it's starting to learn what you value. Oh my gosh, that is exciting.
So also think about we spent the last 20 years optimizing every pixel for human eyes, just one click, right? Or nice marketing ads and bands. Agent don't care about that. It can click 19 times. It doesn't have to be the perfect, is not lazy. Marketing is not really influencing it at that point.
Huh.
So I think it will change kind of we'll call it the great GUI overhaul, we call it in our blog, but it will change the fabric of the internet, and we'll start with the checkout probably.
Interesting. Well, and it sounds like too, it's going to have a material impact on how marketers think about approaching consumers, as you just called out. So super exciting. But with that, if we can, let's come back. We've got Kevin on. Would love to know, how the process has unfolded. How you found Amex, your experience in meeting with Kevin and the events leading up to receiving an investment.
So yeah, as Kevin said, we were introduced by our lead investor, Madrona. They work closely with Amex in the past, with the Ventures and Amex, and they heard what we're building. We met Kevin and the team there, had a few meetings, and we really connected, I think. And I would say that on the question of like why Amex Ventures in general, is I think it's very important to recognize their strategic mandate in the organization. Ventures team, it really stands out. And also, obviously, the knowledge of the business that they bring. They're not just, a bench warmers. They're active, participate in the business, I would say. And it's been the key, helping us grow and scale our ops for sure.
And so, I know you only recently joined us, but you might have just as easily been listening to the conversation that Kevin and I were having leading up to this point. And so it's great to hear that alignment exists very clearly. That said, you mentioned experience with Madrona, and so a traditional financial VC. Anything jump out at you though so far that you noticed that unique aspects of the two different relationships that stand out to you?
Yeah, I think we want to make sure that we build with feedbacks and use of, I would say, the largest payment incumbents in mind. And we really like working with a CVC like Amex, I think because they're dive deep into the product itself. They're vetting if it fits the enterprise or financial institution level strategy. And so the diligence, it could take a bit longer, but than traditional VC. But once they're in, they can open doors. I would say that VC or venture money can't really buy you like screen time with that big of a company like Amex. So it's different for a young company like us. It's definitely something special, and they really roll up their sleeves on our roadmap details. They'll give opinions and opine in a good way. They breathe payments every day. So traditional VC still move faster, I would say, but it's great for pure capital. But if you need deep industry knowledge, a CVC in your area of strategy brings that for sure.
Makes perfect sense. And Kevin, credit to you and Amex for what sounds like is an amazing investment here that has a tremendous amount of potential. And so maybe this is to either one of you or both of you, and if you want to riff off each other, please be my guest. But I'd love to know, what advice would you give to any other founders? Now that you've gone through this due diligence, you have the benefit of getting to know each other and finding this fit.
Yeah, Ayal, why don't you jump in?
Yeah, this is kind of my third run. I was educated in the last era of SaaS before LLMs. I think the playbook have changed. I think you need to ask yourself when you start a new company, a new venture. First, can an AI agent can do that? There's a lot of things you can either automate or give to AI to do. So the teams could be way more efficient, and the discipline for the cash and the burn. Also, there's no reason in this era why you can't get into, let's say, a working MVP and maybe even a few clients before you start raise, and definitely even before you pitch a CVC or some market or big market participant. and kind of no excuses. And before that, maybe you had to raise and have to have a big team before that, but now you can do it yourself. So more of an advice to people like me, but to change the playbook, and it haven't changed significantly, I think, especially this year.
Okay. Kevin?
If we think about companies building in and around AI, particularly when it comes to, fundraising, I'd say you've really got to, spend the time and do some work on figuring out the investors that you might be partnering with, but also, their broader portfolio. I think in this space, I mean, things are moving so quickly, the knowledge that you can surround yourself, within your own company, within your investors, or within their broader portfolio. The number of synergies that I've just started to see happen more and more, with, company A that we may have invested in last year to, company C that we're now looking at investing in today. I think it's coming together really nicely. And in particular, when you start to think about the talent that many of these companies are looking to hire and looking to build, and some of the smartest minds around, AI and generative AI, the pool isn't endless. And so really having the network that can help you build and hire for the long term is going to be huge. I think the piece though that I'd also caution, and I mean we've seen it in various cycles over the last number of years, be it on the fintech side, and today is AI, is be mindful in terms of the cash that you need and sort of the right valuation for the business. Building and setting yourself up for success, can all be wiped away, if you aren't able to hit some of the milestones that our investors are expecting. If you're raising a ton of cash and just spending it in the wrong ways. And so I think as Ayal was sharing, just in terms of, be smart and think about some of the discipline that helped build many great businesses, for the years before this, I think just gets even more important now, just given the current state of the market that we're in.
Sure.
I think that's great advice for any company. And I guess I ought to ask you, I'd love to hear your philosophy on, just how you think about building businesses, given your background, and if you want to weave in how you're going to think about allocating capital to product development versus sales and marketing. But love to hear your perspective.
I think in this era when almost anyone can spin up an MVP with vibe coding or something like that, you need to think about distribution. How would you reach the market? There's so much noise also. Like again, everybody can spin off an MVP. It's how do you, I would say, find the right channels, integrations, partnerships. If you're a B2B player like me, like your champion within a certain company, things like that is more, I would say, top of mind than even product or technology. In my day-to-day, like if I'm taking it 10 years ago, I probably spend more time on product and tech. Today, I more think about the market itself. Think we can do almost any product relatively fast. It's to hit the right one, the right distribution is very important, even more than the past. And also, AI is really, really hyped, and you need to cut through the noise and go LinkedIn or X or just the news. There's so much buzz, and you need to find the truth and be a truth-seeking person, and you need to do it quickly also. So go really, really deep on something and be a market expert.
It's funny having lived through the dot-com boom. There's definitely I feel like there's some overtures taking place, but I mean the technologies. I mean, I'm impressed on a weekly basis. It's incredible. Question for again, either of you or both of you. And so if there's this proliferation of software capability that can bring solutions to market more quickly, what becomes the moat? Is it the channel partnerships and the distributions, or is there something else that you think is going to be core to being successful?
I think unless it's really, really unique deep tech, it's a spectrum. It's less shifted towards code that you have built versus again distribution or how do you approach the market. It's not 100% that, but I think it going towards that. It's almost a commodity to code these days. Not quite there, but that's the vector, and that's where we're all going. And I think it's what set us apart will be distribution. That will be a big moat, a network effect, things like that, a brand, trust, things that set us apart, not just code. And in general, more direction. Code is still very important.
Kevin, love to know your thoughts.
Generally the same sentiment. I'd say the only piece I'd add, and it slightly depends, I think, on the business and perhaps our particular business model. But I think some of the developer-led growth, developer adoption, and really thinking about sort of software engineers as your core audience and how you're building the right product for them, really is going to help a lot of things scale. I mean, we've seen so many things work well, on the open source side and just get a ton of love from the individuals in the community building on top of them, and then ultimately see them scale into more enterprise products. And I think just more and more, over the next number of years, as we see who can, start to build their own product, to, Ayal's point, and how much easier it gets, keeping that audience in mind for your, particular product or service, might be more important than ever.
That makes really good sense. As I'm thinking about this, and Ayal, I agree with you on your perspective on networks. Was the decision to offer the software development kit to the customer base just a natural extension of the opinion?
I don't think there's going to be 200 of these SDKs. We'll tend to diverge to a few and create a network effect. So agree with you what you said, and yes.
That's super exciting. Well, look, this has been an amazing podcast. I would love to say it's more often that we have the benefit of having both the founder and the investor, but thank you both for coming on. Before we wrap up, if there are any members of our audience who'd like to get a hold of you, how can they find you?
So we have a new website, contact there, or ayal@nakuda.ai. Email me anytime, night, day, whatever.
Good stuff.
It's still Ayal that responds. It's not yet an agent on his behalf. So
LinkedIn.
2:00 in the morning, Ayal responds. Hey, how you doing?
LinkedIn and X is also fine, and we'll answer that as well.
Perfect. And Ayal, I also understand that you have a blog on Substack. If any of our audience would like to read it, where can they go to find it?
So it's Nakuda on Substack, unlocking autonomous payments. You can read our thoughts. We try to do kind of a weekly publish there. We're very proud of that, and it's a good way to reach us and read our minds as well.
Fantastic. I mean, it sounds like it's an amazing source of information given what you guys are focused on. And then Kevin, if there are any founders, co-investors who are interested in getting hold of you, how can they find you?
Yeah, absolutely. LinkedIn and email, still the best for me. Email kevin.weber@aexp.com.
Fantastic. Well, gentlemen, thank you so much for agreeing to be guests on our podcast. It was super insightful. And again, for the benefit of our audience, Ayal Karmi, co-founder and CEO of Nakuda, Kevin Weber, managing director at Amex Ventures. Again, I'm your host, Kristian Marquez, founder and CEO of fintech Management. Thank you for joining us for another episode. Take care. If you've got something out of this interview, please share this episode on social media. If you know someone that would be a great guest, please tag them on social media to let them know about the show and include the hashtag Innovators and Investors. I'd love to see your posts and suggestions. We're regularly putting out new episodes and content. To make sure you catch each new episode, please subscribe to the Innovators and Investors Podcast. And your thumbs up, ratings, and reviews go a long way to help promote the show, and it means a lot to me and my team. Would you like to know more? Go to our website, finstratmgmt.com, or follow us on LinkedIn or on X. Our handle is @finstratmgmt. This is Kristian Marquez. Thank you for listening. Until next time.